I hope everybody can see my screen that says, what could 2021 hold? And we'll launch on there. And Craig or Jay, if you don't see it, let me know. But thanks, Mark. Thanks for the introduction. I really appreciate it. And yeah, let's start with the big caveat that take everything I say today with a large grain of salt, because as we'll talk about here in a little bit, things can change rapidly in agriculture in the world, and obviously that can influence a lot of different things that happen on the farm and ranch. But what we're going to try to do today, and thank you everybody, I guess, for joining us. I hope maybe you can get a moment to get out of the cold and get a little respite, get a little heat, and these kind of days always remind me of back on the farm trying to keep the tanks clear of ice, and we had tank heaters that were wood fired, and so we always had to keep them well stocked, and that was a never-ending job in this kind of weather. So I hope you can get a little respite from that. But today what we're going to try to do is talk a little bit about what 2021 could hold, and some of the factors that I think will come into play in agriculture in the state of Nebraska. But I want to do that after setting the stage a little bit about how we emerge from 2020, where I kind of see the financial position and condition of the state's economy, or the farm economy anyway, right now. And want to try to have a little fun with this and make this a little interactive too. So as we go through this, we're going to have a few poll questions that Jay Ferris is going to help me out and get a little sense of what you folks are thinking out there, because I can look at all the data and numbers I want, and sometimes they don't reflect reality, and it's good to get kind of ground truth though. So we're going to start with kind of a fun poll to begin with, if I can get my screen to advance here. Well, let's see. Oh, there we go. So first question we got for everybody, Jay Ferris just put up, it says, given our recent weather, will there be a polar bear sighting in Nebraska? You can answer yes, no, or no, but I saw an Arctic wolf in my place. So please give your answer and submit it, and Jay will show us the results here in just a little bit. And if anybody answers you saw a polar bear, I'm going to be disappointed. That means that this weather is going to stick around for a while. So Jay, do we have the results that we can share yet?
Yep, we're ready. There they are.
There they are. Wow, 31% saw an Arctic wolf already. So, all right. Well, good. I just wanted to have a little fun there to get started, because sometimes we take this economics pretty seriously. So let's start with kind of where we're at in the state's economy right now. Nebraska farm income. You can see this plot's from 2000 through 2020, the estimated for 2020. That's why that's red there, but you can see we kind of had steady growth through 2010. We had those tremendous years between 11 and 14, where we saw one and two record incomes for the state of Nebraska, net farm income, and this includes both farm and ranch. The USDA just calls it collectively farm income. And then you can see we dropped tremendously with the struggles that we had beyond 2014. But here in the last 2 or 3 years, we've seen some increase in net farm income. The 2020 is a projection by Dr. Brad Lubin at the University of Nebraska that projects we're going to get close to $6 billion in net farm income for 2020 when it's all said and done. We won't know for sure until USDA releases its estimates in later this year, which usually is around September. So we won't know for sure, but if Dr. Lubin is correct, that would be the third highest income that we've seen in the state of Nebraska, and it will be the third year we've had an increase in income. And that is really remarkable given what we were looking at last May and June when we were in the throes of COVID, when we had prices dropping precipitously. At the time, I had done some analysis that showed if prices didn't change, we were looking at close to $4 billion of losses, revenue losses in agriculture in the state of Nebraska. So to have a turnaround like that and to show the gains that we saw are really remarkable, and there's a couple of reasons for it. One is the level of government assistance that we saw last year due to COVID and the ad hoc programs there. But the other is the price rally that we saw a little bit starting in August of last year, and particularly in the commodities, corn, soybeans, and wheat. So we'll talk a little bit about the government share of the income last year. Again, 2020 is an estimate. This shows from 2000 and on. And you can see generally government as a percent most years will run somewhere between 10 to 20%, maybe up to 25% of net farm income. We've had a few years, obviously, where it spiked well above that. But you can see last year, if projections hold, we're looking at around 35% of the net farm income coming from government payments. And most of that are just one-time kind of programs like the CFAP program, the PPP program, the some of the other COVID assistance programs. And in fact, we're looking, estimates suggest that government payments to the state of Nebraska to producers could reach $2 billion last year. Nationwide, we were looking at an increase of about 107%. So that's over double what we received the year prior. And so a lot of that then, in terms of the net income gain last year is a direct result of that. And so it's kind of a bit of a false positive, if you will, in the sense that you see that net farm income number, you think, wow, things are looking better. But then when you look underneath, it shows that there's some reasons for that may not be in terms of indicating what the underlying economy is doing. But the other part of that is the commodity prices, and this comes from the Heber report that I get daily, and it's a combination of corn, wheat, and soybean prices since 2017, about mid-2017, and you can see the remarkable surge that we've had in prices over since August of last year. And we've broken out of that range that we were kind of trading in for the longest time. And we're seeing levels up there that are up there considerably higher. We'll talk about what that might mean for 2021. But when you look at what history tells us is that most of farmers in Nebraska will market their, about 43% of the grain that's marketed in the state will occur in the fall after harvest. And so if that's the case last year, you can see the price run up meant a lot more revenue coming into farmers' hands because of that. And so that was another reason for the net farm income. So this is a good sign that we've seen the commodity prices rally like they have. And we'll talk a little more about the reasons for that, but one word would describe it, and that'd be China. They started stepping into the market in a big way. So what does this mean in terms of where we kind of stand financially for farmers and ranchers across the state? The spike in net farm income kind of masks some, get the pun there, masks, kind of the underlying what's happening in the farm economy. We'd seen 3 or 4 years of deteriorating impacts. Farm debt demand was up because they were trying to finance their operations. Working capital was shrinking. And so we were seeing financial conditions deteriorating. What happened with 2020, because of the net farm income and the jump that we had, everything kind of stabilized a little bit. And some factors may have worsened a little bit, but not as fast as they might have absent some of the assistance in the run-up in the commodity prices. And here's a good example: loan repayment rates. This comes from the 10th District of the Federal Reserve Bank in Kansas City. This shows the bankers, anything below that 100 line shows that the bankers are saying things have gotten worse compared to a year ago. So this came in Q3 of last year, the third quarter, and it showed, you can look at Nebraska, the green box is repayment rates in the second quarter of last year were quite a bit worse than they were the prior year. In the third quarter, the same way, they improved compared to the second quarter, but they were still worse than the year prior. And the expectation for that was to continue in the next 3 months too. And so we still had some underlying financial problems or issues out there on some of our farms and ranches. And you can see that Nebraska, for whatever reason, is a little worse off in the loan repayment rates compared to other states in the region, with the exception of Oklahoma, which kind of raises a little red flag of concern. The other thing to kind of look at too is bankruptcies. Last year, these are Chapter 12 farm bankruptcies. Now, a bankruptcy doesn't necessarily mean that the operation is going out of business, but that it's reorganizing and its debts and its financial condition and trying to work out of it. But it does show there's some financial stress there. And you can see we had 32 bankruptcies last year. This wasn't the level it was the year prior. We had 38 in 2019, so it's an improvement, but it's still quite a bit higher than what we've seen in recent years. So again, It's improved relative to 2019, but still historically, it's a note of some concerns. So kind of wrapping up 2020 and kind of where we entered into 2021. Again, we saw net farm income improve. We saw the number of farm loans. I didn't show that graph, but the number of farm loans was down, which that's a good thing. That indicates that they didn't have to, farmers and ranchers didn't have to take on more debt as much last year. Again, repayment rates deteriorated a little bit. Bankruptcies were down, but still relatively compared historically kind of high. And then the other thing I didn't show, but land values, that everyone's expecting, or I'm hearing anecdotally, of land values are stabilized or increasing. So that kind of helps in terms of the debt capacity for the operation as well. So overall, kind of financial conditions, I would say better or stabilized compared to where we would have been in 2020 about this time. And I think if I remember right, Jay, we have our next poll question. And I'm just curious if you could put that up, Jay. It just asks about your operation compared to last year at this time, your financial condition. And this is all anonymous. We can't collect any names or anything on this. And so we won't know. But I'm just curious if you're seeing the same thing on your operation financially. Are you much better, somewhat better, about the same, or worse than last year? And it's just, again, kind of a ground truth to see what you think. So we'll give you a chance to vote on that a little bit.
We got a few more coming in, so we'll hold off.
Okay.
Make sure everybody
All right.
has a chance to vote. We'll close it now.
All right. That's good to see. It kind of shows that. So 7% said much better, 54 somewhat better, and 39 about the same. So that's kind of what the data was telling me and what I was seeing. So that's good to see. Thanks everybody. Appreciate that. So with that setting the stage, looking for 2021, there's a variety of factors out there that obviously can influence what's going to happen. And this is where you start taking things in a grain of salt, because it's kind of Jay Rempe's opinion now of what things could influence and affect what might happen in 2021. And so we'll try to run through each one of these in just a little bit. So let's start with the COVID-19. Of course, that's the big one out there right now that we're trying to work through. There's a lot of uncertainties around it. Obviously, it had tremendous impacts on agriculture last year, caused us to have to reconfigure a lot of things. So the pace at which the vaccinations and that we try to return to some form of normal, whatever that is, I think will go a long ways to kind of determining the overall economic health of the country and agriculture. Just today, I was looking at data from the state of Nebraska, and in Nebraska, about 5% of the population that's age 16 years and older have been vaccinated. So the vaccination, we're working our way along. It's kind of slowly going along. And whatever point we can hit where we can, a lot of people can feel safe and venturing out again, that will pick up the economic recovery. So a lot of it is how soon and how strong will the economy rebound. Last year, the overall economy shrank by about 3.6%. This year, most economists are expecting it to grow somewhere between 3 and 4%, and which is good for agriculture. One of the criticals is what they call the HRI sector, which is the hotel, restaurant, and institution sectors. So like your hospitals, your schools, and those kind of things, along with your hotels. That took a big hit, obviously, with COVID. Through the food sector, the restaurants and the like, sales were off 19% last year, whereas grocery sales were up 10%. So we lost a bit of demand there in the sense that not all that demand that was lost in the restaurant sector converted over to the grocery sector. And the other factor is, particularly in the meat processing or the protein industry, is the different cuts that they demand in the different sectors and the prices and the value of those, that there's a big difference between that. And that's what we saw in agriculture. So moving forward, those disruptions, are we going to be able to come through unscathed with our meat processing sector and avoid any more shutdowns or problems there? because we need those to be running at pretty full capacity to keep things moving along, as we've found. The other thing that's on my mind a little bit is input supplies as we enter planting season. I know, just as an example, my wife and I in November had to replace a refrigerator. Ours conked out. And we really did not have much choice in what we bought because of the disruptions and the lack of supplies that were available over refrigerators. And I'm hearing that in other things too. So that's something to keep in mind as you enter planting season, is to make sure that you got your parts and your inputs lined up. And then, of course, the government assistance and what's going to happen there. Will there be more, less, whatever? That will come into play, all regarding COVID as we move forward this year. And then the other thing that's out there that's kind of overhanging Nebraska is the drought issue. The Omaha World Herald reported a couple of weeks ago that this is the first time in 8 years that Nebraska has been, the entire state has been under some form of drought. You can see from the map here that the Panhandle and the Southwest Nebraska are the most critical areas right now. That's no surprise. They when we enter a drought, they typically are the first to start to show problems. That red area that you see there encompasses about 24% of the state. And so obviously our wheat production, and there's a lot of corn that's produced kind of in those areas as well too. It could have some impact on that. And then when you look at moving forward, if this continues, about 58% of our cropped area is dry land. And so that's when you start talking about the stress of drought on the dry land. Of course, the irrigators could see increased cost because of the increased pumping. And then you worry about in the sandhills and the pastures about forage production and herd capacity. So those things are kind of out there. And not only is it Nebraska, but you can see from the United States, obviously the southwest part is under a brutal drought right now. But the dryness creeps into Iowa and up into Minnesota and South Dakota and North Dakota, which North Dakota has become a major soybean producer. And obviously Iowa, the Corn Belt. So that's just something to watch as we enter in, get closer to the planting season and the drought and how that might impact some of the markets out there, and particularly in Nebraska and our production capabilities. So let's take a little closer look at the crops. We're entering the year, as I pointed out on that graph earlier, with multi-year high prices. Expect those prices to remain at least for the remainder of the marketing year, which ends at the end of August. And a lot of that is due to a surge in demand overseas, but also some production hiccups in some competing countries. And then, last year, our production didn't turn out as much as we thought. So we're seeing some of those high prices. In fact, USDA just yesterday in their latest bumped up their estimate of the average farm price that producers will receive across the nation for corn to $4.30. And they kept soybeans at $11.15. But and both those were kind of in a cycle of tighter supplies right now. I think the soybean USDA estimated the stock to use ratio at the end of the marketing year will be as low as 3%. So we've got a lot of tailwinds for crop producers right now. And particularly when you look at what's happening in some competing countries and some of the export restrictions that they're putting in place because they're worried about food inflation in their countries like Russia, Ukraine, and Argentina and elsewhere. So there's a lot of tailwinds there. Some headwinds for the crops might be at some point that these prices get high enough, they're going to start, if it hasn't already occurred, some rationing of demand, particularly in the feed sector, livestock sector, and also the ethanol sector. And I didn't mention that under the COVID, but that's another critical area is how quick are people going to get out and start driving again and demand gasoline. The last figures I saw, gasoline consumption was off about 12%. So ethanol consumption is as well too. So you kind of have a double whammy for ethanol. So we might see some rationing there. Of course, we have the drought. Another thing to think about is given the price levels right now and the farm programs that we have in place, I would expect very minimal farm program payments this year based on last year's crop or moving forward into next year if things hold. So you won't have that revenue source there. But all things told, things are looking very positive right now for a crop producer. One of the biggest questions is, what are the planting intentions? What are folks going to do in terms of planting this year? This plots out from 1990 the acres of corn, soybeans, wheat, and sorghum in the state of Nebraska. And you can see a couple of trends emerging. One is corn and soybean acres are increasing over time. Corn has grown from just under 8 million acres to now consistently over 10 million acres. Soybeans has grown from about 2.5 million up over 5 million now pretty consistently. Almost, it's doubled over that time. And then wheat and sorghum have gone the other way. But that's one of the, the saying is the best cure for high prices is high prices. And that's because we have a way of producing our way out of high prices. And so one of the big factors, at least moving forward for the new crop, is what are farmers going to do in the way of planting? And so that leads us to our next poll question, Jay. And we're just curious about what you're going to do in 2020. Are you going to plant more corn and soybean acres, or maybe more corn and less soybean, or less corn and more soybean? And so, or less of both. So just curious what you're thinking. The market seems to be right now wanting to bid soybean acres and increase those, but it's all in your hands, I guess, so to speak. So we'll let you vote a little bit on that and see what you think. How we coming, Jay?
Yeah, we're about half of the people have voted, so we'll give them a few more seconds.
All right.
And for the purpose of this test, soybean does mean soybean for that one.
I was going to mention that. So.
Okay, we're going to end it and share these.
All right. So about 40% say we're going to do more corn and soybean, and then 21% more corn, less soybeans, and then 36% less corn, more soybeans. So looks like more acres, but a little different mixture there in what you're going to do. So that's kind of interesting. Thanks, everybody. Appreciate the feedback on that. So let's talk a little bit livestock real quick. We have, and I'm going to talk primarily cattle, just because that's the biggest thing here in the state of Nebraska. And I don't want to slight pork and poultry at all, but when you look at the ag economy in Nebraska, it's corn, soybeans, and beef cattle. So that's why we're focusing there. So looking at 2020, cattle markets did not perform near as well as the commodity markets did. In fact, I think feeder cattle prices compared to January 1 of last year were about the same at ending the year, and then the fed cattle were down off about 10%. So not near, didn't see the inflation that we did in the commodity or the crop markets. But given that we're ending the year, it seems like we have fewer animal numbers out there. It seems like things are setting up for a little bit an improved price situation this year for 2021. We've seen good demand. In fact, USDA just bumped up their beef exports projections a little bit in the overseas markets here yesterday. And then a lot of what for the livestock and the protein sector, the economic recovery, and I put unemployment numbers there because when people have jobs, they have income coming in, they'll eat a little more beef. And when they don't have jobs and less income, then they'll go to some cheaper source of protein like poultry or something. So I think a lot on the demand side for the livestock producers depends on how quick the economy recovers and how quick it grows, and then watching overseas, those other countries as well too, and seeing how they emerge out of the COVID. So the headwinds, obviously the rising feed costs when you have the commodity markets doing what they're doing, and then the distillers grains and the like, the processing disruptions, again, can we avoid those? And then how quickly does the hotel, restaurant, and institutional sector recover and bounce back? So it's setting it up, I think, on the livestock side, the supply side of things look supportive to prices in terms of what's happening there. The headwinds, and a lot of the questions and uncertainties on the demand side and how quickly are we going to cover and what we're going to do. So as sitting here, I don't foresee, I think things will be a little bit better for the livestock producers compared to last year, but it's not setting up quite as positive as it is for the crop production side. And so just talk a little bit more. This came from the Kansas State. This shows their projections of the net returns for finishing steers in Kansas. And I would say it's probably pretty equatable to the state of Nebraska as well. The blue line on the far right is when the projection line from there forward is a projection of what might happen forward. You can see prior to that in 2020, a lot of red there, which is obviously is not good. But moving forward, it seems like things balance out and have a few positive months and then a few negative months as well. So looks like a little better situation moving forward than what we had last year. And then this just plots feeder prices. This comes from the USDA and it's compiled by the Livestock Market Information Center. The bright red line is, and these are Nebraska prices. The bright red line is the average for 2015 and 2019. And then the dotted line is from last year. You can see the blue line is this year. You can see we're starting off less than last year, but hopefully maybe we'll see things stay fairly steady or improve a little bit, and we won't see those dips that we saw last year due to COVID. But still, so relative to last year, things might, in the cow-calf markets, might be fairly stable. But relative to what we've seen the last few years, it's still off quite a bit. So again, it kind of makes it a tough time for the cow-calf producer right now. So that leads to our next question in terms of looking at the livestock industry. Coming into the year, we had fewer cows, we had fewer replacement heifers, and so you would expect to see fewer calves this year in the calf crop. But I'm just curious, for those of you that run some cows, what are you looking at your operation? Are you going to have more calves relative to last year, about the same number, less calves, or not applicable to you? So you don't raise cattle. So just curious, the numbers for what we're seeing would suggest a smaller calf crop, but I'm curious if that's what you're thinking on your operation.
Everybody just a second or two here more to vote.
Okay.
Looks like we've got most of the votes cast. So, and those ensure the results.
Okay. Well, so this is interesting to me because about 30% said about the same number and 17% more calves and only 9% less calves. So that would suggest that I'm picking up some wrong data or making some assumptions that aren't correct. So I appreciate that, everybody. So that's good. So, all right, we'll move on. And got 2 or 3 more topics here to talk about real quick, and then we can open it up for some questions. Exports in 2020 were a rock star, and compared to 2019. And there's the one big reason for that is China. China came in the latter half of the year and started buying a lot of soybeans, corn, and they had been buying pork. And so that surge just really helped in our export markets. And this, what I'm showing here, the red bars are the percentage growth in the export of that product compared to 2019. And then the blue bars are what happened in 2019. So you can see comparable numbers to 2019. The soybeans were up 38% last year compared to 9% the year prior. Corn was up 20%, and they were off 39% the year prior. Red meat and products were up 7% compared to 3%. Most of that is pork. Beef was actually off just a little bit, but most of pork had an outstanding year last year. So you can see all across the board, these are all products that Nebraska exports are key for us. And so we saw a good year last year. And the reason I point this out is because if you look at the value of exports from the state of Nebraska in terms of our commodities, it equates to about 30% of the total ag receipts that we'll receive each year. So our ag exports are around 6.5 billion, 6 to 6.5 billion. And in the last couple of years, and our ag receipts are about 21, 22 billion. So it makes up a significant share, or equates to a significant share. So we got to watch the export markets to see how they're doing. So in 2021, again, it's looking very, very positive for ag exports. And these are the latest estimates on the top that came from the USDA. This is from November, so they're a bit dated, but you can see their forecast for this fiscal year in November was $152 billion worth of ag exports, and that far exceeds anything that we've seen in recent years. And you can see that we've always carried a trade surplus with ag and from the United States, meaning that we export more than we import. But in 2020, in the last couple of years, 2019 and 2020, we were kind of flirting with whether that would continue or not. But they're expecting things to surge this year, and we're going to see that surplus start to balloon back out again. They're projecting at 15 billion. Yesterday, they adjusted their corn exports and soybean exports upward compared to the November. So I would not be surprised if when we come out with new numbers from the USDA, those numbers will be even higher. So again, corn and soybeans are expected to have record-setting years, and that's due to China. They're buying a lot of both right now. One of the markets we got to watch a little bit, particularly for Nebraska, is Mexico. We sell a lot of corn down in Mexico. They've adopted some new rules about GMO corn and basically prohibiting the use of GMO corn or planting GMO corn in Mexico. It's a little unsure or unclear what it means in the way of importing GMO corn into Mexico. So that needs to be watched a little bit, because if they try to make that apply to GMO corn, obviously that'll have an impact on a major market for Nebraska. Beef and pork, when I built the slide, they were looking for basically things to stay pretty stable and maybe moderate a little bit. But again, yesterday they bumped up the beef export number a little bit. But that's okay, because we've had some record-setting years in the last few years in beef and pork exports. So if we can hold that, we're doing good. So I think overall for Nebraska and the products that we export, it's looking like a good year in 2021. The other thing that will probably change a little bit is with the new administration, our stability in relations. I don't think this administration will be so quick to rock the boat, so to speak, in terms of our trading partners and slapping tariffs and things on people. They'll probably work a little more multilaterally and enter into negotiations before taking any. So I expect some more stability there. And then obviously there's a new sheriff in town with the election of Senator Biden, excuse me, President Biden, and that'll have a whole lot of different impacts on Nebraska agriculture. Some of them may not occur this year. I think they'll be a little bit more longer term, but I wanted to throw them up there. I guess one of the bigger questions is COVID assistance, and obviously President Biden is trying to get a package passed through Congress at the $1.9 trillion package. It doesn't look, Jordan and I were just visiting this morning, it doesn't look like there's a whole lot in that package for what we'll consider conventional agriculture. And there are some things in there for agriculture, but they're a little more targeted this time. So I would really suspect that we're not going to see the levels of COVID assistance this year in Nebraska for agriculture that we did last year. If there is some, we'll have to see what form and shape it takes, because that's a big question. The other thing that to kind of keep on the radar is the USDA. Tom Vilsack has been appointed again as the secretary. He's been there before, so he's a known quantity. But I think he's going to have a little different focus this time. The Biden administration really wants to focus on climate change. And so the USDA is going to be looking at ways that it can set up some markets for carbon credits and energy credits and ways to pay farmers for saving carbon and energy and the like. So I don't know if that'll come into play yet this year. I suspect it won't. It'll be more next year, but that'll be something to watch too. And then finally, the EPA, Michael Reagan from North Carolina is appointed to fill in the EPA. Obviously, there's some regulatory issues there that we'll be watching closely. It could have some impact, like the WOTUS, the Waters of the U.S., and pesticides. I think the more immediate one is the RFS mandate. At least initial announcements that they've made on the RFS sounds like they might be a little more friendly towards protecting the RFS and making sure that it does what it's supposed to compared to the prior administration. So that's a positive there. And then the last thing I want to mention this year is the black swan events. A black swan is defined as an unpredictable event that are beyond what is normally expected and have potentially severe consequences. And they're usually kind of unique and rare, and they're those things that just kind of come in out of nowhere and all of a sudden just have a dramatic impact on everything. And when you think about what's happened in Nebraska agriculture in recent years, in 2019 we had the flood and blizzard, and then that same year later in the fall we had the Tyson fire, the processing plant in Kansas, which played heck with the cattle markets for a while, and then obviously COVID-19 last year. And generally, you'd like to think that, okay, we kind of had three of these rare occurrences over the last 2 years. What more can there be? But I think if anything has taught us over the last 2 or 3 years is to be alert, to be wary, and make sure you have your operations positioned where if we have another black swan event, whatever it might be, that you're positioned to manage your way through it as best you can. So the one last poll, I'm sorry, one more slide here. So in summary, again, I think crop producers, things are looking up this year. The couple things out there to watch are the drought. And then I think the other question for crop producers is, will the market and the prices offset the government assistance we received last year? Livestock producers, I'm going to say it's basically give or take. It's kind of a stable year. I think it'll be a little better than last year, but maybe not as good as it has been in the past. And a lot of that is around the demand uncertainties that are out there. Again, exports are going to be a rock star. They're going to really do well. But when it's all said and done, just because we're not going to see the level of government assistance, I think net farm income for the state probably will be less this coming year, just because of both the livestock struggles and the level of government assistance will be less. So that kind of summarizes kind of what my crystal ball is seeing right now. But the last question, and probably the one outlook or thing that people are more concerned about, is the Nebraska football team. So my question to you is, will the Nebraska football team have a winning record here in 2021? Yes, no, or the only win will be the spring game? So submit your questions, and then Craig, I think, or Jay, we can open it up for questions if anybody has them, and I'd be glad to try to tackle them.
Sounds great, Jay. Fabulous job. Thanks again for doing that. Great information. Yeah, so if you have questions, please go ahead and raise your hand, and we will get you in queue to get that answered for you. Or go ahead and please type your question into the chat. And I know I've got one right here in the chat right away, Jay, we can start with.
Okay.
First question is, what direction do you think fed cattle will trend through June, Jay?
Fed cattle through June?
Yep, fed cattle through June. What direction are we headed?
Great question. I think that from what I've seen and read, that things will kind of stabilize in the fed cattle markets. That I think they might trend a little bit to the positive side. And then later in the year, maybe not quite as much. But I've given up trying to figure out really where the fed cattle markets. There's so many different influences on that. But I think, at least for the first half of the year, overall, they're probably looking a little more positive than what we've had in the past.
Sounds good, Jay. I've got a comment here from Brad Lubin. Some people are familiar with Brad. The comment is, Jay, I agree that I wouldn't plan on a new round of assistance in the new round of COVID relief for conventional ag. I'm still expecting a rollout of the ag assistance passed in December, so there should be some payments coming in 2021. That was Brad's assessment there.
Yeah, I'm glad Brad said that. That's an excellent point, because I didn't talk about the December package that the USDA rolled out. So there will be some monies coming in for that I didn't mention that will be helpful. But yeah, I think on the conventional side of things, it doesn't look like there's going to be a lot of help this year.
This one asks, Jay, when you break down net farm income, can you split it into separate farm from ranch?
I'd have to look into that a little bit more. The USDA figures that we follow and use they lump everything together. And I guess I've never looked at whether it splits out the cropping side and the cropping elements from the livestock and the ranching side of it. So that would be, I haven't seen that, but that'd be something I could look into a little bit more.
Okay. Got another one for you, Jay. If carbon credits or some kind of a market is established, do you see Nebraska producers well positioned to take advantage of that, or what might that look like, and how could it impact net farm income?
That's a great question. And I think with Nebraska, with the way our agriculture and the natural resources we have, with the irrigation and the like, I think we would be well positioned to be able to capture some things there. Now, how all these markets start, that's one thing. In fact, I want to look into a little bit more because it's always been an issue that's been out there, but we've never had that sense of urgency that I think we do now with the new administration in Washington and some of the things that are happening. So, yes, I think that it's another source of potential income for Nebraska. I think we're pretty positioned. How this all shakes out and how all these markets, because I know there's a lot of private companies that are investing in this as well too, like Indigo Ag, I think Land O'Lakes, and I could probably list them, Coca-Cola. All kinds are establishing their own General Mills, their own kinds of programs to pay farmers to do various things. And so it'll take some due diligence and work through it, but I think there's some opportunities there.
We got one here for you, Jay. Can NFB or can Farm Bureau help keep us informed of CC programs? And I'm assuming,
Oh,
yeah, go ahead.
assuming carbon credits, you think, is that what?
I'm assuming so. Maybe if they could clarify in the comment, if you don't mind, just to.
Yeah, if that's what they're talking about, that's you're thinking exactly what we're thinking, because yes, and that's why I mentioned earlier I want to investigate this a little more, and we're going to try to pull together some information for our members and producers, just some background on what's happening, what it means, things to look for, and due diligence, and I think that's one area where we as an organization could provide some help to and some information to our members.
So Larry, there you go.
If you can hear me, what do you see happening in farm interest rates?
You know, for the near term, I don't see anything that would suggest that the interest rates are going to go back up. The Fed has made it pretty clear that I think until they get some good, clear signs that the economy is recovering and that maybe inflation is starting to pick back up, I think they're going to keep interest rates where they're at, and so I would anticipate for at least the next few months of interest rates staying pretty stable. And I would be looking at signs of, if this package does pass through Congress and we get this 1.9 trillion out in the economy, and we see we'll start moving out of the COVID, and we start seeing signs of consumers out and buying again, watching for signs of inflation, and then that might be a sign that the Fed might start to put the damper on it a little bit. But in the near term, I think interest rates will stay where they're at.